Hello dear traders, petar.jacimovic here from vicanalysis.com. Um, I wanted to post this my view on the US Japanese yen, since I expecting the higher price and there is also room for potential good profit on this currency pair. So I wanted to share with you. I didn't have time, to be honest, to post in the previous days to post for you guys on the YouTube, on my YouTube channel, but I found time right now to do the video analysis and share with you my opinion about the US Japanese yen in the let's say in the near term period in the future. So first of all, I will start with current trend on the US Japanese yen. I mean, if we speak about our near term trend, so what happened in the past like 7-10 days, we are absolutely trading higher. As you can see, you can also see that on the 4-hour time frame. You can also go on the daily time frame and see that price is going higher in the past 10 days and more. So yeah, past 20 days basically. So this is the short term, the near short term bullish trend on this currency pair. Despite the trend, we also got the something which I pay big attention, and which is my main thing when I analyze. I need to see the a large thing, that's some big volatility on the market before to actually bring my attention to specific symbol, specific currency pair. I'm not interested to trade like low volatility price action, and there is actually no real professional and smart trader who will work in every type of market. You basically wants to see something big to happen on the market, realize what's going on, and then make your decision to achieve the best potential results. And I base my analysis, and I teach my students on my mentorship program, my 7-day course. I teach my students how to actually collect information outside, so from different markets, do the intermarket analysis, group everything into one piece, right, and then make a decision if it's attractive, right? So if you watch only like FX chart, and you think that you can actually benefit and create success, and stable success with controlled risk, and good, if you think that you can create and trade for a living like that, in my opinion, that is actually very limited, because basing trade only because of the FX price action you see on the chart is, for me, very low impact in the trading, and in my opinion, it is unprofessional, right? No offense to anyone who actually base trade only on technical analysis and only technical analysis on a specific FX market, but for me, the professional trader needs to collect information from outside, from different markets who vary big impact on the exchange rate, and then define what's going on, especially using the volume analysis. For example, on the futures market, doing the volume analysis, comparing, also depend on the currency. There is a lot of currencies related with commodities, with energy, and so on. So everything you can collect and you get information, and I will not even speak about the fundamentals and the current fundamental statement, and what you can find according to fundamental view. So I'm a near short-term trading, which is, in my opinion, the optimum frame to trade to achieve the best results. To trade that intraday or scalping, it is actually too fast and a lot of noise trading there. A lot of, you fight basically the algorithms, you fight the high frequency traders if you want to trade even if you want to catch like 10-15 pips, you need to risk also a low amount of pips for that type of trading. And if you risk like 10-15 pips is like very weak stop loss in terms of pips, and very easy achievable by market makers, by high frequency traders, and so on. So in my opinion, even though some of my students do the intraday trading, but they do actually only when they have time, and they do with something like 4 times lower risk than average position near short term. So starting about the year Japanese yen, we see that we are actually an upward trend. price the 4 hours supporting the 50 simple moving average. So the price supporting the 50 simple moving average. Also there is a good upward trend line. So this is according to technically according to 4-hour frame, and there is a space for the strong swing high and near the 107, 106.80, 107.50 area. So that area is my take profit level in the near term period. So about the FX, this is about the FX chart, right? There is also the tick volume, this marked down on the US Japanese yen FX exchange rate and the successful testing of supply, right? So this is a very good indication and absorption of this one, which is actually very good indication for further higher price. Of course, nothing is for sure, so that's the why you need to have the stop loss. Since I have here stop loss, I mean, you secure yourself. I don't risk never more than 0.5% from my account. Usually when I work with larger accounts with 0.3 or even less, depend of the investors and so on, but I never risk more than 0.5, you know, in my near short-term trading, because I don't need to risk. I want to keep risk low and create the good success with very low drawdown, maximum drawdowns. Now this is about this part, and then we go to do some intermarket analysis and to do intermarket research, right? So I will just put you the future chart of Japanese yen USD. This is a 4-hour time frame, and interesting, what bring my attention to this currency pair specifically at this stage is actually the markup. Again, this is inverted relation compared to FX exchange rate, because on the forex the quotation in USD versus the Japanese yen. Here is the Japanese versus the US dollar. It's a different quotation. The futures market, for the people who maybe don't know about what is the futures market, it's basically centralized market where people traders are trading. You know, they buy actually and sell contracts, and this is actually centralized market. So volume is pretty much very valid to watch the futures, and most of these large traders, institutional traders who trade on the futures market, also put a large positions on FX as well. So it's a very related to exchange rate as well. And here we got a actually markup. It's about 80k up bar, widespread of the bar, up bar. With the 80k, you see above the green, this is the number of volume. It's about 79.81k contracts traded in this 4-hour bar, and this is you see the spike in the volume. It's a very big spike. This is what I watched for, you know, in the past few days. I actually observed this one and wanted the right time to establish actually my near short-term position. First of all, the smart money, the smart traders, the institutional traders, they know that they want a higher price, or they want the markup to happen, because that can give them a good opportunity to unload their positions, right? So I mean, think on this way. You always want a better price to establish position. Let's say this is like an auction, right? So you're starting to sell something, starting from, let's say, 10k, then you know, and the people are bidding, you know, price is going higher, 14k, something like that, you know, and finally this person on auction will sell this from starting 10k, and he will sell, for example, on 50k. He will actually sell, right? So this is the same thing. They bidding, and this became very serious bidding here, and then the smart money started to sell. That's the reason why the weakness basically appears on the up bars when it appears, especially on the ultra high volume up bars, and you know, especially also this on the very wide spread. I mean, the wide spread of the bars compared relative to previous bars, right? So this is what happened. On the futures market, I saw that markup, which is basically on the US Japanese yen marked down on the FX market. So this is the bar we speak about, right? And it's also the highest volume, even at the tick volume. So you go then and wait a second, yeah, And you see, we don't know will the price will the smart money will actually sell a larger amount here of contracts and go to absorb all of this, or they will just mark up and there may be some retest for another markup or something like that. It's why the patience is important, and collecting the more information is better rather than jump just like that. You don't jump only because of this potential markup. It's a first major sign of weakness potential, but it's only potential. It needs to prove in the next period, right? And I teach a lot of this on my program, right? So if you're really interested in my style of trading and how to actually intermarket trade and how to position yourself to achieve the very good potential risk-reward ratio of positions, then my mentorship program is actually very good for you, and you can basically learn basically everything you need for full-time trading and to become a professional trader. Starting here, I found this supply trend line very, very respected by sellers. So they add a little bit, they add just to protect this price from going to higher price, right? Since they have their opening positions here, right? So they just put enough supply to selling to protect their adding positions, right? They're unloading. And the price is going lower, right? There is no big indication of any larger demand. Look at this demand here. This is a very no demand. I mean, it's a bar close in the middle, in the volume below the average. So absolutely no buying pressure at this point. I'm testing on this trend line, which is very, very good for further lower price on the Japanese USD futures or the higher price on the Japanese yen. So this is one of the things I watched and I really, really liked at this point to. I really liked what happened actually here, and that was one of the things. So then we can go to other things, which are, for example, let's take a look, for example, 10-year bond yield in US, right? US 10-year bond yield. Maybe you don't know, but some of the basic rules in the intermarket analysis, especially when we speak about the Japanese yen, is when the bonds are going higher, the yen will weaken, right? So the bonds outside the Japan, when they're going higher, the yen weakening. And this is what happened exactly. Look at the 10-year bond yield. Look at a very strong upward price on the bond yield. And similar chart like US Japanese yen, right? So also going higher on the 4. This is also 4-hour time frame. Or this is a 5-hour time frame, but it's very similar, right? Look, this is the 4-hour USD Japanese yen, and this is the 10-year US bond yield, right? So there is also that correlation. So bond yield actually confirmed this as well. Also, if you watch intermarket correlation, the oil price is going higher, actually trading higher, since the the Japan is an importer of oil. The higher oil price affect actually they're not good for Japanese yen currency, right? The yen currency. So since they're big importers of oil, higher oil price means actually weakness for Japanese yen. So that's also one of the things. Then we got more and more. I can go, and this is my process I do in every setup. I basically want to see what's going on, to relate it to what I trade. Basically, I don't want just blindly. I mean, you can see the picture. If you trade just blindly like that, you don't know what's going on, and you don't have purpose of trading, just because of stochastic showed you, or just because, even though you trade only, for example, volume analysis, it's not enough. It's not just enough. I mean, yes, volume analysis is a big part in trading, but without the understanding of the intermarket correlation, your success can become like 40% larger if you add the intermarket correlation and understand what's going on in intermarket correlations and how to read the fundamental sentiment. For example, right now I will show you also interesting thing, which is commitment of traders. Also, I watch this one because it's also reflect exchange rate, right? So everything which will affect exchange rate and where is a big money involved, you actually, you, in my opinion, you need to look and see what's going on, right? To achieve to actually create the best opportunities and the best setups, right? This is the Japanese yen. This is a commitment of traders Japanese yen chart, right? We speak here about the net non-commercial positions, which are usually hedge funds and large institutional money. So here on this graphic, we see that the net non-commercial positions ran from 68, almost 69k, right? Positions. They dropped to 45, almost 46. So it's a significant, how to say that? So they bullish bets on the yen by hedge funds and other large speculators just decreased. They're not anymore bullish on Japanese yen, right? Because this is what is showing also the commitment of traders the previous week, right? Since this is a weekly report, the previous week got a 68k, almost 69k, and so this was a 2 weeks ago, pardon, and the previous week was 45.90. This is decreasing by large speculators, or we call the net non-commercial positions, and we saw the decreasing, right? So you see almost like 25k, 24k decreasing in positions. So what does that represent? Also commitment of traders show it us, and this is also big money involved, that large institutional money basically reducing their bullishness on the Japanese yen, which means it will actually let the Japanese yen to go into weakening and basically how to say that, released USD versus Japanese yen. So USD now got a breath, you know, it got time to breathe, right? So it can go higher according to this intermarket analysis and what's happening here. We can see that there is also very big chance that price basically go higher. How much higher? We got levels there. We never know how much higher it can go. It can go much more than we planned, for example. It can go less, but I don't see any big significant resistance before the 107 area. Let's say this is also a round number. So I will collect potentially, if everything going good, I risk here like 60 pips and I'm trying to take 300 pips. It sounds like a very good risk reward ratio, which is about 1 to 5 risk reward ratio, right? So I feel if I'm risk like 0.5%, I'm going to take potentially 2.5% return on my account, right? So, and if we go, I can go on more and more. I mean, this is how I teach my members to observe the market. This is in my view the best optimum way to do. You also read some headlines as well on the different websites to see what's going on. For example, there is a big headline that, for example, in the Bloomberg, that yen holds 3-week decline as hedge funds reduce bullish bets. We also saw that on the actually commitment of traders, and that's confirmed also in the headlines. Basically, analysts from most of the banks, their trading desks, said that they have turned bullish on the dollar yen. So they turned it bullish on the dollar yen, and hedge funds, bullish bets on yen by hedge funds and other large speculators succeeded. Yeah, so speculation, yeah. So they basically turned bullish on the US Japanese yen. They were bearish, but according to current sentiment of the market, high oil price, there is also in the futures market, we saw that there is something very good cooking there. So the futures market traders also joined in for potential and betting for potential weakness of Japanese yen. The hedge fund and speculators also, we saw that they also using the COT report and using the some also headlines and some fundamentals views together with volume analysis and price action. This is the how I actually trade and how I prepare my analysis and how I do every time I position myself. I must make I must do the whole research, see what's going on, try to find it. Also, I added that market profile analysis, which is also helping me for let's say the better triggering instead of only triggering. This is the market profile chart, the letter chart, right? So it's not price action. You see the letter here. The point of control here is the middle, where we have the largest number of letters here in this price, which means that this is a point of control where the price trades most of the time. This blue one, yellow one, pink one, these are representing the sessions. Blue one is it's the PIT US session when the stock market opens. This is the only US session when it starts. This is the Sydney, this is the Asia session, Europe session, and so on and so on. So you see that yesterday we got a strong point of control in the US PIT session, Sydney session, and Asia session in the pretty similar area, and this is the where I actually also that confirmed that this area is actually very good to establish for buying position at this stage right now. So all of this, you know, it's like the homework I teach my students how to do in my 7-day course, 7 days course, where I teach step by step, starting with the price section, adding the volume analysis, how to actually we read the fundamental sentiment, how we read different, how we collect different informations from other sources, like we watch the yield curves all around, you know, we see the correlation there. We watch also what's going on with gold also taking the big part in the for the FX exchange rate. So we take a look about the energies like oil and so on, and we get the picture how to establish like near short-term position, and how that we have actually very good reasons for, and very, you know, potential very high risk reward ratio in every single setup. Doing analysis like this is something which is like must in the professional trader, in my opinion, and I have experience of 8 years also working with also large traders who works for hedge funds and so on. So I mean, it's up to you, but this is the way. If you want to learn this, don't waste time with the fancy indicators. Don't waste time with and think that it's about the indicators and it's wondering why you don't have success on the forex, because mainly the average retail trader will watch like chart like this only and base trade according to this, right? If you base trade just according to this, you have like 60% lower chance to establish qualitative setup, which you can actually hold with quite strong confidence, and you have a 60% less chance to do this if you only do like FX and watching charting on FX without having no clue what's going on all around this exchange rate. So this is a very big point. I basically watch only to trigger that FX chart. Everything else is lying in other markets, in the volume analysis, in the fundamental view and sentiment view, reading the some also fundamentals, what's going on, the positions of large speculators, and all this actually make me to, if I want to go in position or not. At the first place, it must be liquidity, which I observe, and once I see something very big happen on the market, or some big liquidity happens on the futures on the other markets, I just take my research and do step by step everything, and you know, and try to create the good setup, right? If you want to start any kind of cooperation with me, you can contact me on the Skype. My Skype username is petar.jacimovic. I will also write my Skype username in the description of the video, so you can contact me there. Also, my website is vikefanalysis.com. I also post my video analysis there. You can join the My Forex Factory thread, which is the Art of Trading Better Serbia. So I'm a veteran member of the Forex Factory. well-known member there, so you can join. That is the largest forum in the world about forex. And yeah, you can follow me on the Twitter as well. I have a free Skype chat room for everyone can join. Basically, I do the group calls. I wanted to inform you about that. Yeah, that's a very good thing for you. I will actually put the link of the Skype room, my Skype room, in the description of the video. So you just, if you have Skype, if you don't have, just download. It's free. You just click on that link and you will see the link of the room, and you can also become a member of my room. It's a private room where I speak. We actually all speak about potential trading ideas and so on. I also do some group calls and so on. So it's a very, very good, also useful for everyone. That will be all. If you like my analysis, feel free to comment and like the video, and you know, see ya. Hope so in the next few days. If this everything go like you know, like I plan, and you know, and anyway, I will do the update and see what's going on. If I have anything new and any good potential opportunity, I will let you know. Bye bye for now, and wish you a good trading.